Good afternoon, everybody. Thank you for showing this panel, How We Do It at the University of Massachusetts, Boston. Welcome, everybody, to the Capital City Student-Centered Urban Public Research University, the University of Massachusetts, Boston. Give yourselves a round of applause. Those standing in the back say, Chancellor, did you run out of money or something? Why don't we have enough chairs up here for everybody? We're honored to have this esteemed panel of financial service leaders here with us today at this amazing Venture Development Center. If you haven't had a chance to walk around in here, check it out. I love the fact that we have our moderator waving a fan already because it's so hot in here, sizzling at the University of Massachusetts, Boston. Thank you to Jay and Bob and John and Vivek for taking your time out of your busy schedules to be here today. And thank you to my colleague from right across the street at the Boston Globe, SHIRLEY, LEUNG, for being here. Thank you. We're so grateful to you. I also want to thank Massachusetts Competitive Partnership, including their CEO, Dan O'Connell, who's here, a longtime friend, for making this opportunity possible for our students today, as well as Liz Reynolds, Executive Director of the MIT Industrial Performance Center, and our own John Ciccarelli, I get stuck on that, and also Bill Braw for their leadership. Bill Braw from this Venture Development Center. Give them a round of applause. We're also grateful to MACP, recognized as our public universities are critical to the future. They're recognizing that. This workforce is a wonderful thing. Look out at all this talent in this room. I cannot think of a better location than this Venture Development Center for our panel today. This is one of the top accelerators in the country and a perfect home for entrepreneurs like Vivek. This is great for you to be here. Look around and see all the innovation, but more importantly, all this potential all over the room. On top of the insight these leaders are going to share with us today, I also want to recognize their ongoing partnership with our university and our students. For example, our State Street Scholars Program, which is approaching its 10th year anniversary, has helped provide more than 300 students scholarships and paid internship opportunities. It's truly incredible that more than 80% of the participants receive job offers through this program. I'm so proud of that relationship. Putnam Investments also has shared a decade-long partnership with our university. We want to especially thank Ed DiLio and also Pat Flaherty for their contributions to our College of Management and to our university as a whole. And for Dan Farrell, Head of Equity Trading, who mentors our Student Managed Funds program. Speaking of our Student Managed Funds team, if you're here, could you stand up so we can see you? Yes. If you want somebody to manage your assets, we have the team for you. I know they are joined by keep standing. I'm hyping you up. Where is Professor Bando at? Yes. Students, I am so grateful to you. Now, our University of Massachusetts Foundation first provided our Student Managed Fund $25,000 in 2008. Since that time, we've been going all over the system, wiping people out, kicking butt and taking numbers. Because of this great team, our $25,000 investment has grown to more than $200,000 in assets today. Give them a round of applause. What I love is they have defeated every one of the other campuses at least twice in the last 5 years. And we're so grateful for that. We're so proud of all of them. We're delighted to have the opportunity to learn more about your financial services journeys and the future of this industry. I know some of them have been embarked on adventures of their own, And so we're going to have a chance to talk about that, as well as going down to the New York Stock Exchange and other locations to do all that you do. So all the students that are here today are eager to learn how they too can become a part of our dynamic FinTech innovative cluster in Massachusetts. So let's get started. I'm going to turn it over to my dear friend Shirley. Thank you for allowing me to go. And let's get a little bit of air up in here if we can. Because, okay, you feel it coming now? Okay, because it is sizzling, but I don't want it that hot. I don't want our moderator to be too hot. Let's give them a round of applause in advance. Thank you. So grateful to have all of you. Thank you.
Is this on? Oh, great. Thank you.
Now I feel the air coming.
Thank you, Dean Motley. Chancellor Motley, excuse me. You know, you didn't think you would have to turn the AC on in November, right?
Well, this is a wonderful time of year for us. It's always hot out here. I'm telling you. We always need a little air when we get our students together. So thank you.
Well, this is a great showing, standing room only. Anyways, I'm Shirley LEUNG. I'm a columnist with the Boston Globe, and I'm going to do brief introductions of our panelists here, and we'll talk about FinTech, and we'll actually even try to define it today. And then we'll have, I think this will be about 45, 50 minutes, and then I'll leave a few minutes at the end for Q&A from the audience. So I'm going to start with Jay Hooley from State Street and Bob Reynolds from Putnam Investments, because I actually know what they do. It gets harder when I go down the line. So Jay Hooley, right to my left, is the chairman and CEO of State Street, which is one of the world's leading providers of financial services to institutional investors. And I actually had to check my notes twice because I don't usually write the word trillion in my columns. So his company has over $27 trillion in assets under custody and administration, and $2.2 trillion in assets under management. And I'm going to give you a little fun factoid about State Street, and that is, in addition to, when we think of money, we just think of money, but actually they also hold a lot of gold. About $50 billion worth of gold. It's probably a lot in gold bars. I tried to ask Jay where he holds it. He wouldn't tell me, but he said yeah, you would have to kill me, but I know there's some in Massachusetts, and I think there's some in caves, really, somewhere around the world. Next to his left is Bob Reynolds. He's the CEO of Putnam Investments, one of the leaders in the Boston mutual fund industry in Boston. Prior to Putnam, Bob was the chief operating officer and vice chairman of Fidelity Investments. Sorry, this microphone is a little loud here. But fun factoid about Bob. A few years ago, his name was floated out there to be the NFL commissioner. This is the job that ended up going to Roger Goodell. So I often wonder what would happen. Would we even have a Deflategate if Reynolds was in charge of the NFL? Not a chance. Remind me, why you played in college? What's the NFL? What's the football connection?
Well, I played in high school, but I officiated college football for 14 years in college basketball.
Got it. So that's why qualified you to be
business and in the sport.
Yeah. So and then to his left is John Fawcett. He is the CEO of Quantopian. Did I get that right? Rhymes with utopian. That's right. Okay. And I have to actually read what he does, because otherwise and you'll see why. John Fawcett represents the FinTech portion of this panel, along with Vivek. Quantopian is a crowdsourced hedge fund that provides the world's first browser-based algorithmic trading platform. And on his platform, you can write code to execute your investment strategies instead of relying on manual trades and emotional urges. So it is quite the new world of financial services. And then to his left is Vivek Gupta. He's the founder and CEO, and it took me a while to pronounce this, but I finally got it. It's It's COVRD, covered. So it's a cool word, cool spelling of covered. And covered reduces the gap between when you earn your income and when you receive the money. And basically, it's super short loans. And it's actually a really cool idea. You pay a flat fee every week, $2 a week, and if your bill comes before your paycheck arrives, his company covers the difference with the ease of a weekly fee. So, pretty neat idea. And he also is an entrepreneur residence here at UMass Boston. So I wanted to start with Vivek and John about, oops, I don't need that, about Vivek and John. I was hoping you can start us off about just defining FinTech. I mean, you two represent kind of the broad spectrum of what FinTech can be in Boston. If you can define what it is and tell us how Boston became a hotbed for FinTech.
Okay. Is this working? Yeah, okay. So I think, in my mind at least, when I talk about FinTech or when I think about FinTech, it's simply the combination of both the words. Basically, technology enabling finance in some way or the other. Finance has been there for a long time. Technology has been there for lesser time than finance has been in this world. But when you combine both of these, you create something which is a win-win for both. And whether it's in terms of lowering the costs of reaching customers, whether it's in terms of better assessing risk, whether it's in terms of what Quantopian does, getting better returns, I think finance and technology, when combined together, is a strong and powerful force. And startups in the FinTech space have this sort of blank slate from which they can reimagine both these domains together. So that's what I think of FinTech. I think this one.
This on? There we go. Hey. So I think the other thing about FinTech is it's a huge, huge field. So there are companies doing lending. There are companies doing new forms of asset management like Quantopian. There's payments. There's automated advising. So there's many, many different subfields to FinTech. I think here in Boston, because of the history with asset management and the Goliath companies that we have here in Boston, asset management is a particularly special field for the FinTech scene in Boston. So I think going like one level a little bit deeper, I guess, into each field helps to make sense of it. And there's lots of new companies and existing companies in each of those subdomains.
How old do you think FinTech is around here? I mean, how old is the industry here?
My first company was a FinTech company. We started that in 2002. At that time, we called it financial technology. So I don't know.
It's much cooler, FinTech.
Yeah, there was a branding mishap calling it financial technology. So I think at least 20 years, because when I started my last company, there were lots and lots of entrepreneurs in Boston already. Had started companies, whether it was in data, supplying to the asset management industry, or small technology companies and consulting companies. So I think it's a pretty old field. It's just newly branded the last 5 or 10 years.
And Jay and Bob, if you could talk about, I mean, you both run companies that are iconic brands in financial services in terms of managing money. How do you deal with this new world of FinTech? I mean, do you, within your own companies, decide we can do this too, and we're going to do this in-house, or do you try and compete with the startups, or do you partner with the startups, or outright buy them? I mean, how have you dealt with this kind of fast-changing world?
Yeah, let me get started, Shirley. I just want to trail on the comments. The FinTech in Boston, FinTech generally is in the very early innings. You know, I look at technology disrupting other industries, and it's far more advanced than where it is in financial services. So I think the very good news for all of us is there's a long way to go. The other thing I would say is about every aspect of financial services today is under pressure. You know, whether it's because of regulation, whether it's because of difficulty in generating returns, whether it's the cost of developed market infrastructure. So I think this convergence of difficult markets, challenges, and technology coming to age is, just the perfect storm. Tell you a little story about, I think one of the major challenges for FinTech is to disrupt, and I'd say, Bob would probably say the same thing, we're using FinTech to disrupt our own company. And whether we do it with these guys or do it on our own, we recognize that if we don't dramatically change what we do, somebody's going to do it for us. And let me just give you a little vignette. We have a company, we have a subsidiary in China, which was started 15 years ago. It's kind of interesting that it was started in concert with Zhejiang University, which is one of the major computer sciences universities in China. It just so happens we've been there for 15 years. We have 2,500 people. Zhejiang, you might recognize as the birthplace of Alibaba. So we've grown up together for 15 years, and we've come to know each other, stealing each other's staff and the like. And I was there 3 months ago, and I was invited by the CEO to visit their financial services subsidiary, which is called Ant. And so I walked into the lobby, and this woman who was hosting me took me over to these big flashing plasma screens. And she said, let me give you a sense of what we do. She said, these are heat maps of China. She said, this is our e-commerce business, and it's showing real-time the flashing purchases that are going on around China. And she said, on the back of that, we developed a payments business. And so she said, here's a second map of payments occurring around China. And she said, based on the purchasing and then the payments, we concluded that we could develop basically a credit assessment of our customers. In this country, we call it a FICO score. And so based on that, we started a bank and we're extending credit. So she took out her cell phone and said, I could go into a store and put my card down, and they've already calculated my ability to pay, and the payment would transpire real time. I was there because they want to get into wealth management and looking at low-cost asset allocation overlays populated by ETFs. And so they took me through this whole thing. Now, here's the punchline. So this is in China. They have 400 million customers they're doing this for. 400 million customers. It's all real time, and it's run on a public cloud. So you look at that and say, wow. And then you look at developed markets, financial infrastructure, T+1, T+3, and say, whoa. So I think one of the big challenges for FinTech is to help developed companies disrupt their infrastructure so that they can look more like Alibaba in China than they do Putnam and State Street in Boston.
Yeah, that was a great story, Chad. But to me, FinTech and financial technology, whatever you want to call it, will always be in the first inning, which is great news for people looking for opportunities, because with the development of technology, it allows you to do things better, whether it's investing money, whether it's mining data, whether it's any service you could announce, interaction with individuals. It will be better through technology. And so I think the opportunity is unbelievable. Technology has been in this business for a long, long, long time. And the thing I know is that every day it gets better, it gets more sophisticated, it allows for better solutions. And clients, when you deal with Jay deals with a lot of institutions besides investors. We deal with investors, institutions. Clients want to do business with companies that are going to be out there 3 years from now, 5 years from now, as partners to them. They want to do business with someone that's going to grow with them. And to me, the greatest way to demonstrate that is through technology. Because people can see it, touch it, feel it, and the other thing which is going on everywhere around the world, but I think especially in financial services, is mining of data. As this data becomes more and more accessible, you say, what do I do with all this? So you work on programming, systems, way to get more and more information. Because the more information you have, the better decisions you make. And that's what technology is bringing to financial services. And again, we're in the first inning. And for those of you that aren't baseball fans, that is the start of the game.
Jay, you said something very interesting about FinTech can help disrupt within your own companies. Can you give an example of how that's happening at State Street?
Sure. The one that comes to mind most immediately for me is blockchain. We've been at it for a few years, and most people.
What's that?
Blockchain. So blockchain is the technology that underpins Bitcoin. So I think when Bitcoin first hit the scene, is this helping?
Wait, how do you spell it? I'm sorry, you have to spell it for me.
Blockchain. Blockchain.
B-L-O-C-K?
C-H-A-I-N. Yeah.
Okay, blockchain. Okay, go
So here's the power. I mean, it's the technology that underpins Bitcoin. When Bitcoin came out, most people viewed it as a fad. But if you understand blockchain, which is an open system protocol which allows peer-to-peer communications of a transaction, including the financials, and you link it to the story I told earlier, it is the potential to be a major disruptive factor within financial services. So to your question, we have 4 active pilots going on within State Street, and we've created a consortium of 13 banks. So the pilots are designed to see if we can deploy blockchain internally within our organization to disrupt traditional connection points when a trade comes in and something goes out. Connecting it to a consortium ultimately could allow blockchain to be the backbone of a transformative move in financial services to take all the latency, all the delays out of transacting. So I think it has the potential to be a real game changer. You're reading more and more about it today. There was a full-page article in the Financial Times. So that's a great example of a new technology that has the potential to disrupt what I think badly needs disrupting.
I think the other thing about Bitcoin and blockchain is it's a brand new technology. I mean, it's very, very young. And so if you're a student now, you're incredibly lucky because you're going to be coming into the workforce at the same time that this technology is. It's a huge advantage because no one really understands how to apply the blockchain to different business problems yet. And so you have this opportunity to grow up with it, which is very, very unique timing.
Shirley, I was going to say earlier that, we're in this period, and most of us in financial services, probably more Bob and I than you two, have lived through the financial crisis, which was a nightmare, and we're living through all of the post-financial crisis regulation, and so we're kind of consumed by it. But as I look at this period we're in right now, and you go forward 50 years, we look back at this, it's not going to be about the financial crisis. It's going to be how technology disrupted financial services.
No, I mean, just hearing you guys talk about it, and it seems like it's going to be a huge force. One of the things, this is a great segue to talk about what do you got? What do each of you? Maybe Vivek could start us off. What is the next big thing in FinTech that you see, and what will it take to get there?
Sure. I think one of the things that it's sort of adjacent to our business and that I passionately feel about is basically providing more banking services to the unbanked and the underbanked. And this is where technology can play a transformative role. Just to give you some numbers, if 8% of US population is unbanked, so which means that they don't have a bank account or they don't have access to traditional banking channels. I think if you take underbanked people, these are people who can't get most of the services from their banks. I think the number is as high as 15 or 17%. Coupled with that, you see that on an average, a checking account for a major US bank makes a loss of $81 a year. So if you combine both of these together, you see that the way the system is structured currently, there is no way that we are going to reach out to the unbanked or the underbanked people, because it just doesn't make business sense. And this is where I think technology, the entire technology ecosystem, whether it's by bringing payments virtually on the phone or by eliminating bank branches, this is where technology can play a major role. And this can be done, by traditional banks in association with startups. It can be done by banks if they're willing to disrupt themselves. But in my opinion, getting 100% universal banking coverage and ensuring that the advantages of banking reach the entire population is one of the biggest problems that we face today, and is probably the problem that deserves to be solved immediately.
The one that's going to be easiest to solve. So in my case of Alibaba, the reason that those 400 million came up so easy, they were unbanked.
Yep.
So they had no starting point. So technology can go right there. There's nothing to disrupt or replace.
So I think there's trends within market segments like the unbanked, and I think there are also technology trends that are very, very powerful. And I think the most important trend in the broad economy today, not just within financial services, is the explosion of data that's available from the real economy. So if you think back 25 years ago, and the amount of information that was available for a supply chain or traffic patterns or any other facet of the economy, the frequency of updates were quarterly. So basically, when companies would report their earnings once a quarter was when we would get an update on things like oil production, right? Real basic facts about the economy. So fast forward to today, and there's an incredible number of data sets that are available at a much, much higher frequency, right? So there's virtually nothing that can't be measured that has economic importance that can't be measured on an intraday basis. So it used to be that the only piece of data that was updated very, very frequently throughout a business day were stock prices. But today, there's everything, right? From satellite imagery to traffic patterns to just every form of consumption, right? If you think about all the commerce that happens via credit card processing, right? There's just incredible amounts of very, very detailed, high-frequency data that's produced by the economy. And today, still, most of the analysis of that data is fairly manual, meaning that you need a person to sit down and analyze those data sets. So if you imagine just super exponential growth in the amount of data, and then very slow linear growth for the number of people who are trained to analyze it, there's a massive gap, productivity gap, between the amount of data that needs analysis in order for the economy to function optimally, and the number of people that can actually analyze that. And so I think the biggest opportunity that there is in the coming 10 years, not just within financial services, but across the board, is building tools to automate that analysis and make individual data analysis much more productive. And so I think that trend is actually been slow to act within financial services for a whole bunch of kind of idiosyncratic reasons, including the availability of data specific to finance. But it's starting to happen, and it's starting to gain a lot of momentum. And I think it's hard to overstate how important that is for finance.
I hear a lot, when you look at FinTech, a lot of people talk about data and analyzing data, but I'm still having a hard time wrapping my head around what does that look like. You'd mentioned that another sector does this well. Maybe that could help. I was just trying to think, what do you guys do with all this information? You started to talk about it too a little bit, Bob, but.
The state of the art is like ad placement, right? So if you go online, the ads that are shown to you, there's an incredible, incredible amount of processing that happens before you see that ad. And I think that's probably the leading edge of analyzing. So the profile of every single consumer,
Oh, that's right.
right, is stored away and accessed. But
Yeah, I was going to say it's the personalization of everything. So, like now, when you go on a screen, if you've been on one site, all that information's coming to you right now. And to me, that's just the beginning of what's happening. And the power of computing has gotten to be amazing. I mean, just on your, I have an iPhone. I saw someone with BlackBerry. Would you put that in a museum somewhere? Oh, you have a BlackBerry. Okay. But, you know, there's more power here than used to be in a mainframe computer. And everyone's going to be able to do all types of business, information, own access to the data they want, when they want it, and it's going to be all in their control. And everything that's going to be sent to them is going to be personalized to them. So to me, that's the exciting part of all this. I mean, you talk about the liberation of people. You're going to be in control of all facets of your life, right in your hand.
Can you give us a mutual fund example in your world of how using data could become a personalization of, I don't know, my mutual fund something?
Well, I think it will definitely be on the investment side. In a 401k, right now the big funds are target date funds, where you really take someone's year of retirement and say, we're going to invest a portfolio for you for that retirement date. Well, not every 30-year-old is the same, not every 40-year-old, you know, you can go on to the list. So through the access of information, data that is available to people, they'll be able to structure a portfolio, a target date fund, so to speak, just for you. And to me,
That sounds really good. They can't do that now?
not totally now, but someone's working on it very, very hard.
I mean, now you raise a question, I was thinking, you're right. It should be more customized than the year that you retire. That's actually really inadequate.
And that reaction, I think, is common in FinTech. Like, why isn't it that way already, right? Because of all these other services that we experience and as consumers.
Yeah, so a lot of the data right now is locked on mainframes and other sources, so you have to get access to those data. I think one of the interesting things, we sell mutual fund to advisors around the country, around the world at all, but now you can access data, so you know in a branch in Tulsa, Oklahoma, what they sold through that branch yesterday. And it's getting to be that you'll know exactly what that advisor sold. And you triage all information, how they come to you, things they've looked at, you buy services, you know, and it's mining the data. So every morning our wholesaler comes in, they look at their iPhone, and these are the 10 best calls you can make today. And that'll become more and more sophisticated. But again, the more information you have, if I have to meet with Dan tomorrow, the more information I have about him, the better that meeting is going to be. And that's, you know, part of what's happened in the industry today.
Trying to think of what's left. So I'm going to go with data too. I think that, you know, if you think about my Alibaba story, or if you maybe wonder why Apple and Google are getting into the payments business, it's not about being in the payments business. It's because you're in the payments business, you get data, you get insights. You derive from those insights opportunities to do social engineering, figuring out what the next product you can sell. Shirley, if you were to go out and get on the Betterment website, it's one of these robo-advisors. What can be done through a technology to allow you to customize an investment portfolio, either for a defined contribution plan or otherwise, is remarkable. So I think that, you know, whether it's the process of personalizing information, whether it's, you know, the process of engineering better investment returns based on data, whether it's using payments as a vehicle to collect data, to gain insights on individuals, that's where it's all at. I think the reason that we haven't seen more advancement in financial services is a couplefold. One, there hasn't been the catalyst. So financial services, bull markets has gone pretty well. It's hit a wall recently.
08 was a very
Yeah. But the other thing I would say, John, and you might, it cuts both ways, is regulation. So on the back of that, this tsunami of regulation has hit financial services. And guess what? In order to satisfy the regulatory needs, you need data. And you not only need data, but you need it real time. So I think the opportunity to aggregate data for specific purposes, to personalize it, I mean, I look at every corner of financial services and it looks like an opportunity today. And it really is, I won't say archaic, but it's a long way to go between financial services and some of the things that some of the technology firms are doing today.
But it will be the betterments of the world, firms like yours, that push everyone there. Because as Jay said, you can be very, very disruptive in business now with a small idea, because even though it may focus on this piece, usually the application is huge. And I go back to individuals. I think what it all comes down to personalization, but people will do business on their terms, no one else's terms. A bank's not going to dictate to you that you got to go to an ATM to get money or you need to do this. You'll do it the way you want to do it. And to me, that's great. That's what it's all about. And so, you know, as a CEO, and you talked about disrupting a company, it's all about getting better. Because if you're not getting better, if you're doing the same thing tomorrow you're doing today, you're not improving. And you know your competition is. So if you're not trying to disrupt yourself, looking for the new wave, paying attention what John's doing, you're going to lose the game. So it's imperative running a company in 2015 that you know what's going on in every facet of it.
So recently, to that point, Bob, it was 18 months ago, I've always prided myself on staying reasonably current on technology trends. Hard to do. But I increasingly became worried that, you know, we're sitting on this 225-year-old company and we're not moving quick enough. So I took 15 of our best and brightest employees, and I gave them 6 months, and I said, go to Silicon Valley, go to Hangzhou, go to wherever you need to go to, and discover what's going on. You know, figure out what's going on from the outside in. And their mission was, we've got 3 lines of business, was to come back with a plan to disrupt us. Come back with, you know, if you were on the outside in and you were unconstrained by resources, how would you disrupt State Street? And they went out, and it was remarkable. So first insight, they went to the, call it the digital platform providers, the Googles, the Amazons, and were shocked at how focused they were on financial services. And, you know, I look at that and say, I mean, financial services is a great business. It's got great trends. It's
Let me jump in there. They haven't met the regulators yet. Once you meet the regulators, let's not go into financial services.
great.
That's the game plan, right?
Great long-term trends, laser focused. I mean, the reason they get into payments, I mean, they're respecting the regulatory moat, but they're looking around the edges to say, how do I?
And the good thing about being a new company or a new entrant is you get to pick and choose, right? So you have entrenched existing businesses that are important to your financial health of your company, right? You can't say, oh, we're not going to worry about this set of regulations if it's a third of your revenue.
So it also led us to Alibaba. It led us to robo-advice. It led us to blockchain. And so as a result of that, we established the Emerging Technology Center, which is virtual, but it's got a leg in Boston, it's got a leg out in California, a leg in Hangzhou, China. A group of people who are looking outward, horizon scanning, to say, which are the firms out there that we'd like to bring in and potentially partner with. It's looking internally to say, how do we disrupt our own environment with different pilots? It's, to your point, it's bringing the outside in. Because if you lived your life in financial services, you would miss 80% of what's going on. So it's important to look into the tech field, look into startup companies, look into some of the big digital platform providers, and see how they're seeing the world, because it's a far different view than we're getting from the inside out.
Yeah, I'd just add that the biggest mistake people made is, well, they're doing it over there, we didn't invent it, so we're not going to do it. If someone has a good idea, go for it. I mean, if the way they're managing money is value added and superior, go for it. Don't sit back and say, well, we have this protected case. So I think to be just totally open and be aware of what's going on, and if someone has a better idea, go for it.
I think that's necessary. That's like the big first leap, and it's kind of new to hear a big Boston company talk that way, so that's great. But if you look at Google, they have Google Ventures. You look at all of these tech companies, they very, very proactively are plowing money into new companies, and they don't settle just for knowing about the trends or maybe investing in one company. You know, they're launching flocks of new companies and drawing talent to the West Coast. So I think that needs to happen here. We have, you know, this treasure at all the universities that we have, and we just export so many students. So it'd be great to have the same dynamic happening here.
We heard a story last week that I thought it really stuck with me, that right now Boston, the Boston area, is the epicenter of biotech. And at one point, we were the epicenter of technology. But what's happening, and there are companies moving in from divisions from all over the world into Kendall Square and the Seaport District, and companies are moving out of, one big company just moved from Florida. But what else do you see happening? You see all this biotech happening, but what's happening right beside it? All the big technology companies are moving right next to them. And long term, there's going to be technology, data, biotech, the best teaching hospitals in the world, and all this is going to converge together. And again, it's almost the same thing. There's so much data, there's so much information, and it's going to be a revolution at some point.
And I would say, picking up on, Bob and I were in the same meeting, the biotech, and most of these folks don't remember the 70s when we owned the technology world, but the point of all that was that you need an ecosystem. You know, you need the entrepreneurs, you need the education and academia, you need the business community, you need the government to stay out of the way, but also, you know, facilitate connections. And I would suggest, as it's interesting when you think about, when I thought about this meeting today and I thought about the things that State Street has done, many of them have happened away from Boston. So Hangzhou, China, 2,500 employees linked to Alibaba. We've got a venture out on the West Coast with Stanford and UCal Berkeley around data and analytics. There's more that we need to do in this city. And you know, there's something that isn't quite hitting the nail on the head with regard to whether it's mentorship, sponsorships, partnerships, that you know, this meeting and discussion in our meeting last week brought to light that there's really more that we should do to open up the channels between academia, the business community principally, and make sure that those ideas are flowing, that, you know, there's conversations going on, that there's people willing to mentor. Some of it's happening, but given financial services in Boston, given academia in Boston, I'd say we're underutilizing that lever.
Especially on academia, I think that's sort of Boston's secret weapon, especially in FinTech. I mean, you want everything that has to do with FinTech, it needs to have a strong theoretical foundation for it to be successful. And I think that's where a lot of collaboration would help. You know, our startup benefits a lot from, you know, the co-founders' backgrounds here at universities in Boston. And I think a lot of founders would find value in that rather than, you know, just locating to the hotspots of West Coast or something like that.
Another thing that's unusual of FinTech is the financial side of the business is an area, the rare area within technology where experience is really, really important, right? So learning a new technology when it's coming up is relatively feasible when you're inexperienced. It's almost like a benefit to be inexperienced because you're learning as the technology is evolving. But finance is a very, very old field that's very highly developed and has many difficult problems from regulation to risk management that you can't learn in a year.
I'm sure we have a lot of students here, perhaps, and a lot of you maybe have some interest in getting into FinTech. So what advice would you give to students who want to get into this field? I mean, what would they study? What kind of internships would they get?
I mean, I'll just give a broader, any of my employees or even my kids, when they ask for career advice, less about FinTech, but I give them 3 or 4 things, which is whatever you do, whether it's in the classroom, whether you're working for Putnam or State Street, 1, you have to perform. 2, you have to be a good team member. So today, so much happens in collaboration that, in our company, we call them the Red X, the hero that can do everything but can't get along with anybody. They're out. And then the third thing is career risk. So, I think, FinTech is these guys, not long out of university are taking chances. It may work, it may not work. I suspect just knowing them briefly, if the first one doesn't work, they'll try the second one and the third one. So I think that, there's something about technology and maybe FinTech in particular that it's going to not work more often than it works. So 1, you need to be educated, you need to be a good teammate, and you need to be willing to face rejections, get up, dust yourself off, and do it again.
Well, I think the note that was hidden here that it has to be a collaboration. I think the fact that Boston does have a huge financial community. It's the birthplace of mutual funds. There's tremendous asset management, tremendous private equity, hedge funds, et cetera. We, as a business community, need to reach out to the schools more. And I think the program that you have going on here is a good benchmark for other schools to have in place, because it's going to be a combination, because I think help, work, whatever you do is going to come from all forms of education and how it fits into financial services. I can make a very good case that in retirement, your greatest expense is healthcare expense. So there will be a lot of work done on healthcare coming into finance, and how do we finance that and work together on that. But so I don't think you can put together a career path. I think it's going to be through a lot of discussion, experimentation, but knowing the landscape and then heading in that direction.
So my feeling is the future is made of software. So the very first thing that I tell everybody who asks me this question is learn to code. There's so many different ways to do that while you're in school, outside of school, and it is a fundamental skill in the new economy. So you need to understand how software is made, even if you're not going to end up being an engineer, which is a great job I love, but just understanding the process and what's involved. It's a mode of thinking, and it's really the most creative field that I know of. It's the only engineering discipline where you can have an idea in the morning, you have a product in the afternoon. It's a really wonderful medium to work in. So I think that's the most essential thing. And then if you know that and you end up at a large company or a startup, just being close to the people that are making things, whether you're doing it yourself or you're in a sort of supporting role as a business analyst or as a product manager, that is the way that everything is going to work within financial services and the rest of the economy. So you want to know how to do that.
I'll give a more in the trenches view. I think as a career advice, only thing that I would like to say is know one thing really well. Be a master at one thing, and that just ensure that whether it's Bitcoin or whether it's coding or something like that or a particular language, you know everything or as much as possible about it, because that will always make you valuable within your company. If you are the resident expert, there is no way that you can be replaced.
I want to go back to one of the first comments a few guys made about FinTech being in the first innings here in Boston. And so is it the first innings in Boston? Is it the first innings everywhere? We often think of Boston being, the undisputed leader in biotech. Are we the undisputed leader in FinTech, or, is Silicon Alley in New York or Silicon Valley, eating our lunch in that sector, or maybe no one is? I don't know. If you can just kind of give us a sense.
Yeah, I think it's the early innings everywhere, but I also think it's ours to lose. That while FinTech has got some deep footings here, it's not just here. New York is doing some creative things. California is doing some creative things. China's doing some creative things. So I think, part of this discussion is an acknowledgement that, that there's no place where the raw materials are more clear. Academia, business community, I think we have in the financial world, we don't have banks anymore in Boston. We're not a bank, we're a securities processing firm. So we're really I would say if we have a sweet spot, it's asset management, whether it's hedge funds, private equity, traditional asset management, mutual funds. So it really is a shot to, we need to make sure, not unlike Bob's earlier metaphor, that we don't lose it. There's nobody ahead of us now, but if we blink, we'll be behind.
Yeah, I do think it's a mindset of people. I mean, Jay, do you think you run a financial services firm or a tech firm? Yeah. We all think we run tech firms that happens to do financial services on the side, because we're always looking for ways to take advantage of data, interact with clients, get our message out, et cetera. So it's one that we're all running tech companies now because of where we are, and financial services happen to be what we do.
I think the one area that's a little bit further along are payments and consumer retail. So Silicon Valley really has the playbook for consumer companies, right? They've really dialed in how to market. There's a job at every startup called like chief growth officer or growth that deals with marketing to individuals. It's a pretty well developed field, and Silicon Valley is dominant in that. And I really think the unmet need in financial services or in FinTech is asset management, and that is really untouched. It's amazing to me sometimes how much greenfield there is in asset management.
And I would say, John, fairly lightly regulated up till now. Bob will disagree. He should come see me if he knows wants to see what regulation is. But I would say
You're too big to fail.
touche.
So unfortunately, if you look at the data, Boston is not at number one. It's after New York and I think Silicon Valley and New York, whether you look at it in terms of number of employees, number of VC dollars or something like that. But it is definitely the fastest growing. So that's the positive side of it. I think I totally agree with John. What we do good here is the finance part of it, bringing in the technology, the rigor that is there. What we don't do well here is the consumer-facing part of it, the UX. How do you acquire customers? How do you make the customer experience seamless? And unfortunately, Silicon Valley has stolen a march over us there. But I think it's all about us focusing on our core and trying to either get people from there or developing our own talent towards how to make our products easily accessible to consumers. I think that's what will define whether Boston will succeed or not.
We have time for a couple questions, 2 or 3 questions from the audience. I'll give someone my mic, actually.
Just a quick question. You talk a lot about data, and my question is, do you think there is a future for big data and finance correlation in the future? For example, companies like Intel, they're using big data to make a business decision like more efficient. So do you think can big data help financial institution make efficient investment decision, like better?
I think it's at the center of all of this conversation. So to me, big data is enabling vast amounts of information in ways that are digestible and usable for investment management, risk management, compliance, operations. So Shirley referenced, we have $28 trillion in assets that we safekeep all over the world. And we've got a massive, we call it digitization effort going on, because to the extent that we can digitize that, and for Bob's a customer of mine, and if I could deliver all of his data real time so that his portfolio managers could, not only the data, but the analytics that goes with it, it would be hugely valuable to his ability to run money, to comply with rules and regulations. It's a big data application, and I think that one of the things that defines financial services today, maybe more than most industries, it has an enormous amount of disconnected data that, you know, if you can bring it together, the insights, and I would say not just bring it together, but real time makes a difference. So, you know, we all can do it if you give us a week, but it needs to be minutes.
So you guys are calling this tech movement, like FinTech, as a disruptive factor. Now, so what are some of the challenges that you guys face as big companies when you're trying to adapt to technological movement like FinTech?
Maybe I'll start that since I'm one of the big companies. It's the biggest challenge, which is why partnering with startups and fintechs, doing it outside, it's why creating the Emerging Technology Center away from the core is so critical. You know, big companies have a routine. They have there's a certain the way the culture works, the way change takes place. It doesn't happen like it does in these firms. And disrupting is about speed. You know, it's about having the insight. It's about executing quickly, failing quickly. It's not endemic to most big companies. So, you know, for us, you need to do it inside and outside. You need to find many different ways to try to disrupt the traditional thinking and the processes or the products internally that people hold dearly. They believe, heart of hearts, it's the best thing ever. They don't have the perspective of what it might look like if they were sitting in Google. So I think the biggest challenge for big companies is to disrupt themselves. And I don't think you don't do that by creating an internal strategy and hiring people and saying, oh, now go disrupt us. You really need to have that outside-in connection in order to be effective, I think.
Yeah, when you run a larger company, what you always trying to do is make it nimble, fast. So you create a lot of small companies within a larger company. I think the thing that a large company brings to the table is resources, whether it be capital, whether it be different type people, different disciplines, et cetera. But the whole goal is to stay nimble, quick, and it's got to be a mindset of from the leadership on down that, hey, no one's going to disrupt us. We're going to be disruptive to the industry, regardless of our size.
Yeah, Bob brings up a great point because it's not all or nothing. You know, it's one thing to create a new product. We've got 30,000 people in 100 locations around the world. How you implement that is a headache. But you know, I think that what we do have is the resource and the process mindset. So we're working with a firm called Ripple in the blockchain world, and what and what that brings is the outside in. you know, they've got the insight, the technology, we have the application setting, and we've got enough people that are open-minded that it's that inside-outside partnership.
I think the other thing that's huge in finance is trust, right? So the largest, most successful institutions really, in addition to having distribution and resources, they have the trust of the public. And so as, you know, a nascent asset manager, who combined with you manages trillions of dollars, you know, it's it's very hard to get people to trust you, right? Especially when you're trying to do something really, really unusual.
And the most important thing to a lot of people is their money.
Yes.
So trust is a critical factor in financial services, believe me.
Hello. So we kind of discussed some of the benefits of the availability of data information. Lately, I've been contemplating on some of the downsides of that. For instance, flash crashes in the stock market, or maybe the lack of transparency of dark pools in trading. Do you think that that's something that will be addressed by newer technology, or does government regulation play big into that? Or what are some of your thoughts on just the fact that technology can sometimes have downsides to it?
I think particularly with trading, it actually starts with a change in regulations. So it used to be there were a very small number of trading venues, and there was some deregulation that happened, and now there's, I think right now, 18 or 19. And so that's a like mathematically provable chaotic system. And so everyone who's interacting with the markets needs to trust this system, but it's completely, by definition, unpredictable. And I think that, with regards to trading, is very, very challenging. And so I think that what's happening now, there are new companies like IEX, and I think it's LUMINEX is the other trading venue that's come along. They're trying to provide solutions to people who are, you know, market participants that don't want to put up with the opacity of the current setup of the markets. I happen to believe that more regulation would probably make that problem worse, inadvertently, you know, with the best intentions, but because it's difficult to understand the emergent behavior of this very, very complex system, I think it's very, very difficult to regulate it, and I'd rather see the market sort itself out.
Not, you know, the trading is a good example, and LUMINEX is a good example. The flash crash, some of this is the regulation not keeping pace with the technology. And it looks like a technology or a business problem, but it's really, we're a big ETF provider. Back on August 24th, there was a big dislocation in the ETF world, and if you look into it, it's that the market wasn't producing prices on a current enough basis to price the product. So it's really a market structure issue. It's really where the thing needs to be. And LUMINEX, John, we're one of the partners in LUMINEX. That's an example where technology can disrupt that. So as opposed to trading through an exchange, LUMINEX is a peer-to-peer trading platform where there's 13 of us in the pool, and if I have something to sell and BlackRock has something to buy and we match that trade, we don't use an exchange. It's peer-to-peer, which is a lot of where this technology is going.
Yeah, I just to add to that, one of the things I think we all need to prevent is allowing technology for people to take advantage of the system. And a lot of the trading strategies was people were just getting access to information a fraction of a second ahead of everyone else. And that's not the way the system's supposed to work. And what I fear, because mutual funds were meant for Main Street to invest, that people will think they don't have a chance. And that's not in the best interest of the system, this country, or for the wealth of individuals. So I think there will be things like that caused by technology. We need to understand them, and if there needs to be regulation, have it. But if it's just the regulator hasn't kept up, we need to fix that.
think we've run out of time. I want to thank Jay, Bob, John, Vivek. I've certainly learned a lot about FinTech. I had to write I know I got to look up blockchain, more importantly, but I remember recently I had to write one sentence in a column about FinTech, and I was reading it. I for the life of me, could not understand it. But now, after spending an hour with you guys, I get it, and I actually hope to write more about it. So thank you very much, and thank you, UMass Boston, for hosting us.